Good evening, everyone. Tonight I'll be talking about this setup I saw on Step Index. It's an index that is being traded on the derivative platform. I don't know, maybe some other broker has it on their as one of their instruments, but I use Deriv and I trade it. It's a synthetic, anyways. Yeah, I the last time I spoke, it was about a formation about rising triangles and falling triangles, and how reliable it is it's when the formation comes up. So about 20th of October, that was some few weeks ago, I spotted the setup on 5 minutes on the step index. So I'm going to put you through how you are going to be trading it. So on this particular one I saw was a rising triangle. So as you can see on the chart, I have identified three spots on the downside with the rising triangle. So I'll be able to connect the fourth one. The top is flat, just like I mentioned in my last video. The top is flat and there is a diagonal under it. That is the typical structure of the rising triangle. So what we are looking forward to is a break out on the upside of this rising triangle. But the longer it stays in that triangle is what could give us much more confirmation and how flat the other side of it is, because we need it to be perfect. Like, the shape has to be perfect. Anything other than that will turn into another chart formation entirely. As you can see, the chart broke. There was a breakout on the upside just as expected, and it went up. I traded this on that particular day, and I made a lot of profit from it, because one thing I have noticed about rising triangle is that the profit, the reliability of the chart itself, of the pattern, it makes you it's it's a lot better than a lot of other chart patterns we trade. Yes. So the breakout was smooth, and the returns on investment was very, very massive. So measuring out the profit target for the trade, for the analysis itself. As you can see on my charts, I've been able to measure the initial impulse move before the formation of the chart formation on the chart, which is the rising triangle. The move is almost or even more than the initial impulse move. So if you're a trader, or if you're a beginner, or you're intermediate and you want to start you want to add this to your arsenal, you want to add it to your trading setups, you want to look out for this in your upcoming trades, in your charts. It is applicable to any chart, irrespective of what you trade. Maybe you're trading oil, you're trading currencies. It's the same thing. So far, you have a flat top and a rising, like a diagonal, rising triangle on the other side. Or even if it's the other way around, maybe it's a flat under, then a falling triangle. Just ensure that when you're drawing it out, it has to be the line has to be perfect. The dots have to connect. Anything outside of that will be giving you another formation, maybe a rising wedge or a falling wedge, not this particular formation, so that you will not get it all mixed up. So basically, as a trader, what I expect you to do is to go through your chart. You can do a back test, or you can go through previous charts to like see for yourself. You can scroll back to about a month ago, then start looking at the chart. Try to spot out those patterns where it has happened before and how it reacted. That will give you an understanding and expectation of what to expect when you see something like that form up. Okay, what I'm trying to do here now is that I'm measuring out the shortest possible take profit, because it is not always that you would get the maximum take profit. So like this one, your first TP should be the highest distance within that triangle. And that was what I just measured out on the chart now. The highest distance within that triangle is what your first take profit should be. Then, after you must have taken profit at that level, you break even. That's if you open 2 trades or more. You break even with all your remaining trades, so that in case the chart refuses to follow up with that trend and it pulls back, you have nothing to risk. It will be risk free. So as you can see, the expected returns is just as calculated. Even with what we're looking at, when it got to the first take profit, you saw there was a pullback. There was a pullback. When it did exactly that same height within the triangle, there was a minor pullback before it eventually went all the way down. So I want us to look through the chart to spot other places where the same incident have occurred. So like this one presently I'm drawing, it's an example of a falling triangle. Yeah, example of a falling triangle. Because you can see it's clear too, but the difference between this one and the former one I showed to you was that the former one had more points, had more contacts. You know, as you can see on the triangle, we had about 4 contacts before the eventual breakout. On the flat side too, we had about 1, 2, 3. Yeah, we had 4 contacts. It was on the 4th contact that it eventually broke out. But this new one had just 2. Had just 2 contacts on the diagonal, and on the flat side it has 1, 2. Then it broke out on the 3rd one. So when you have just 2 contacts on the diagonal like this, you can still refer to it as either a falling triangle or a rising triangle. But the bad side of it is that it will not go far. I have seen this a lot of time. When you have just 2 contacts on the diagonal, it will not go far. Quote me anywhere, it will not go far. I've seen it more than 20, 50. I've seen it more than 50 times. Yeah, I've seen it more than 50. It won't go far. It won't. It won't. In fact, sometimes it will not. It won't even do. It won't even do the minimum distance. That's the highest point within that triangle. It won't even do that. I've seen it a lot of time. But in this case, I think index are much more controlled. Synthetics are much more controlled. It's not like currencies that you have to depend on news and other external factors. Anything can go on in any of those countries that might spike the currency or maybe monetary policy or anything like that. But index are much more regulated. You don't have to worry about the news. It's always 247, 365 days a year. It has nothing to do with maybe there's a public holiday, there's a weekend or anything like that. So this one is if you are more of a technical analysis person, I recommend you try out synthetics. It's just that there are no off days. You have to be disciplined enough to decide when you're not going to trade and when you're going to trade. So with what you're looking on the chart now, it is a pure demonstration of what you can get when you add this trading chart pattern to your arsenal of trading. It really helps a lot, and it gives you peace of mind. Just that if this is the only thing you're trading with, if this is the only thing you're trading with, it's good. It's good for a start. But the only bad side of it is everything starts to look like a rising or a falling triangle to you. It's just like when we talk about somebody having only a hammer in his toolbox. Every problem begins to look like a nail. You understand? So, but take a look at this third one I'm drawing now. It is at a point it's beginning to look like a falling triangle too. At a point it's beginning to look like a falling triangle, but just take a look at it. It broke to the upside and went the other way. So it's not even. Yeah, that's to show us that hey, if you are thinking this is going to be a falling triangle, think again. This is not a falling triangle. So if you can spot these things early on, and the bigger the charts, the more reliable it is. Just that, like the bigger the time frame. Just that the only issue with bigger time frame is that you can wait a whole year and you will even see this once on a 4 hours chart. You can wait a whole year. Yeah. Go and check from January till now. You can wait a whole year on the 4 hours chart and it would not even appear once. But there are a lot of charts like that to look at for. So this fourth one I'm drawing now, this looks like a rising triangle too, but you can see from the trend line connecting them itself, there are too many pull-outs, pull-ups like that. So it is no longer, you can no longer consider this a rising triangle, but a rising wedge. It looks more like a rising wedge than a rising triangle. More like a rising wedge. As you can see on the chart, that looks more like a rising wedge than a rising triangle. So, and rising wedge too, it's a very good chart formation that works that works very well when you're trading. But you need to master how to trade it. If I'm going to be trading a rising wedge, then I'm going to be combining it with other things like maybe what do we call it? Say divergence. Yeah, divergence is another setup of the zone. I'm going to talk about that one anytime soon, but not today. Then look at this last one I'm putting together. That's what do we call this? Head and shoulders formation. Within that head and shoulders formation as well, yeah, you can still spot falling triangle. Yes, a falling triangle right there. Yeah, on one side of it. But if you start to connect the trend line on the diagonal side of it now, just like what I just did, you'd see that it's not very regular like that. You need something that is just clear, like it's just perfect, it's just textbook perfect, so that you would not have to worry about maybe you're being right or you're being wrong. So, like just the measurement I did on this head and shoulders formation now, the distance between the head and the touching point of the triangle of the hand of the head, you can see the distance I measured is the same distance it went down. So head and shoulders, I will talk about that in another lesson. And this is a rectangle formation too. It's just like market telling you that's a sideways movement, but we'll talk about that one too in another lesson, in another video. So this particular one I just want us to focus on is the rising triangle and the falling triangle. Thank you very much and have a wonderful day.